So now we're going to call up a little bit early, but he's been waiting patiently, Matt Hougan. And Topher is going to be the moderator in an armchair chat with Matt. I just wanted the chance to say hello, Matt, before I turn off my video. We were very lucky, Alice and I, to meet with Matt and Hunter Horsley when they first, or shortly after they first launched Bitwise, Bitwise having been backed by Blockchain Capital. Alison, for full disclosure, is on the board of Bitwise, and we're early investors in it. But I've got to say, it's one of those things that I am so excited by, to watch the team go from a few hundred million to many, many billions and billions of assets under management. And thank you very much for joining us again, Matt. I know last year the audience was really excited to hear what you had to say, and I'm sure the same will be true this year. So Topher, I'm going to turn off my video. It's all you.
Thanks, Matthew. And again, welcome, Matt. It's great to have you. Just so people are aware, blockchain co-investors and Bitwise, as Matthew said, have been partnered together for many years, and we've come to know you as one of the real cornerstones of the industry, particularly in the public quadrant. But I realize some folks on the line may not know who you are yet, Matt, or what Bitwise does. So before we dive in, can you just give us a few minutes on who you are, who is Bitwise, and what kind of products you offer to the market?
Yeah, amazing. It's so wonderful to be back here. Blockchain Co-Investors has been such a great partner with us throughout the years, as Matthew mentioned, from when we basically first started to today, where we have $10 to $12 billion in assets under management and growing very fast. So for people who don't know Bitwise, we're a specialist crypto asset manager. We run a variety of products in both the US and Europe, including one of the largest Bitcoin ETFs here in the US, the most liquid Bitcoin ETF in Europe, the largest crypto index fund in the world, SMAs, all sorts of public vehicles that help mostly professional investors, financial advisors, RIAs, family offices, and institutions access this space. And we've been doing it for 7 years. So we've lived through bull and bear markets alike. I'm the chief investment officer, have been here from almost the very beginning, look after our investments and research, and contribute to product and other parts of the company. My background, for context, before I came to Bitwise, I spent 15 years in the ETF industry and was the CEO of ETF.com. So this recent year, where we've seen ETFs and crypto collide, have been like a family reunion for me. It's been wonderful to experience, and I think we're just getting started in terms of the growth. So it's great to be here.
Awesome. Great to have you. And I know you have a long history in ETFs, and Matthew and Allison do as well. But some folks on the line may be less familiar. So before we get into why crypto, why a Bitcoin ETF, and any of that, can you just remind us maybe on the genesis of ETFs and why they're superior financial products to many alternatives, and why Bitcoin or Bitwise chose to pursue an ETF-specific strategy?
Yeah, absolutely. I'll even share a fun story from the history of ETFs, which I think informs a little bit about crypto. So, ETFs are a technological innovation on top of traditional mutual funds. So mutual funds, created roughly 100 years ago, became the dominant way that people accessed the market. ETFs, created roughly 30 years ago, had a few advantages over traditional mutual funds. For one, instead of trading once a day, they trade throughout the day like a stock, and you buy and sell them just like a stock. For two, they tend to be lower cost than mutual funds, substantially. I think ETFs have lowered the average cost of investing by about 0.5 percentage point in public funds. And they also tend to be much more tax efficient, to the point where if you look at the net flows, not the total AUM, but the net flows into investment vehicles over the last 10 or 15 years, it's more than 100% goes into ETFs. In other words, money is coming out of mutual funds into ETFs broadly in the public markets. And so, we worked for 5 or 6 years on launching a Bitcoin ETF because we knew from surveys, from market trends, from conversations, that this was the primary way that financial advisors and family offices in some institutions would want to gain access to the space. And sure enough, once a Bitcoin ETF launched, that's exactly what happened. They pulled in $37 billion in their first year. That made them the most successful ETF launch of all time, more successful than gold, more successful than S&P 500, more successful than NASDAQ. And I think it's just off to the races. The fun story, and then I'll stop, Topher. I'm old enough to remember when people didn't love ETFs. Today they love them. When they first launched, the Financial Times called them weapons of mass destruction. Believe it or not, there were congressional hearings about ETFs destroying the American dream. Large financial companies were very skeptical of this new innovation. They said it would never work. And now here we are today. ETFs are $15 trillion. I see so many parallels to crypto. People skeptical, they don't understand it, congressional hearings, big companies afraid of it, but we're right at that inflection point where we go from, in my view, a couple $1 trillion to 10, 20, and more $1 trillion in the near future. And it's sort of wonderful to see the parallels between those growth. And of course, crypto is an even bigger trend than ETFs were. So that's maybe more than you asked, but I thought it'd be fun to share.
No, we appreciate it, and we certainly agree. We see the exact same things, and we think much like the ETFs were then widely accepted and recognized as one of the best financial products in history, the same is happening now. But I'm curious, because you guys were working on it so early, 5 or 6 years even before the ETF. What was that process like in the run-up? And was it a popular thing at the time? What was the reception like? Were people having those conversations, or were you kind of alone?
Yeah, so it was very popular from the investor demand side. People were always asking us for an ETF. We knew they wanted an ETF. The relationship with the regulator was, quite frankly, exhausting. We produced over 500 pages of original research that we submitted to the SEC. I took 31 trips to Washington to meet with them. And that was during the good phase of engagement. After those 31 meetings, under the Gensler regime, they basically cut off communication. And the only way we got a Bitcoin ETF is that a firm sued the SEC for acting in an arbitrary manner in denying it. And sure enough, they won that lawsuit, and that paved the way. And it's important to note what happened. All that happened is that ETFs lowered the cost of investing and made them more secure. So we sort of helped Americans who wanted to invest anyway do so cheaper and in a more secure fashion. It's boggling to me that we had to fight the regulators for so long in order to get there.
Yeah, now we see that same issue occurring now in blockchain. It's very hard to fight the tide of cheaper and more accessible, but people will do it nonetheless.
That's right.
Maybe on that note, I'll shift directions a bit and say, what makes Bitwise different from most other liquid crypto asset managers in the space? I know there are a lot of options and a lot of ETFs out there.
Yeah, I think it comes down to a few things. I mean, if you look at our ETF, I could talk about the technical differences, right? We're cheaper than BlackRock and Fidelity by about 20%. I think our trading and security infrastructure is better. But the two reasons people really seem to gravitate to Bitwise's ETFs, the reason we've been able to compete, is on the one hand, we're the most crypto native, I believe, of the issuers, in that we donate 10% of the proceeds of our ETF to support Bitcoin open source developers. We publish our blockchain addresses so that you don't have to trust that we have our Bitcoin, you can verify it. And I think those sort of crypto native components of our offering really appeals to a crypto audience. And then the really big thing for traditional investors is we support the ETF with a distribution team of 20 people in every part of the country with educational materials. I wrote the CFA Institute's Guide to Crypto, because what people don't realize when they allocate to crypto who aren't familiar is it's not just a buying, there's the holding aspect. And if you're going to hold it through all the news and all the tumult, you're going to want someone who's paying attention to it and can help you interpret that. And I think Bitwise, really distinguishes itself on sort of standing behind our ETF, having our research team there to answer your questions. And that's resonated with a lot of investors as well.
Yeah, we've certainly heard that from conversations we've had as well. I didn't know you wrote the CFA's Institute's Guide to Crypto, though. Very cool. Maybe I'll just take us back a little. When we spoke at BlockTalk 2024, about a year ago, the landscape was markedly different. I think we'll agree on that. We had just seen the ETFs kind of launch, which nobody expected outside the industry, and journalists got it completely wrong. They launched to record numbers, pressure was mounting on US leadership and regulators to kind of catch up to the times, and Bitwise was growing massively. So since then, I know you and others like BlackRock and Fidelity have just had a phenomenal year. So can you just recap for us what's happened in the past year and why we're in a different world now?
Yeah, I mean, first of all, launching the ETFs changed the game in terms of professional investors' ability to allocate to the space. So they had always wanted to, but it was so hard. It was possible, but it was hard. You had to do a private fund or an imperfect vehicle. So one thing that really changed on the first, let's say, 8 months of the year or 9 months of the year was we saw just an explosion of interest and allocation from financial advisors and family offices and institutions and even countries into Bitwise products and into the ETFs more broadly. And that's really been a wonderful change. We spent a lot of years talking to these folks and we're successful in building our business. I think we got to $1 billion in AUM. But as mentioned at the top, we're now at 10 or 12, right? So that is a substantial growth. So that was sort of phase one change. And then phase two change, which I don't think we should overlook, is what happened during the election and the change in Washington's regulatory attitude toward this industry, which in my view is a bigger change even than the introduction of the ETF. I think it's really set us up for a multi-year bull market. We do a survey of financial advisor attitudes towards crypto every year, and we did it immediately after the election. And 56% of the people we surveyed said they were more likely to allocate to crypto now than they were before the election. And the reason for that is it removed this regulatory cloud of uncertainty. So just from an allocation perspective, it increased. And we haven't, that's before you get to sort of the innovation that we're going to see now that people are freed. So, it was sort of a strange moment last year when we talked because I was very optimistic about the ETFs, but there was still this regulatory cloud that made it difficult to operate. Now we have the ETFs, they're seasoned and they're proven, and we have a very positive regulatory environment. I've never been more bullish long-term on crypto. I don't think there's ever been a better time from a risk-adjusted perspective to allocate to the space that I've seen because we've removed substantial risks. And so this is just a really exciting moment for Bitwise and I think for investors, and including your investors.
Yeah, I appreciate that. And I actually just want to double click on the survey because I know you put out one of the industry's most detailed surveys on this topic and on what wealth advisors and money managers are actually asking and looking for. So maybe could you just share some insights from that and what types of wealth advisors you're seeing ask for exposure to blockchain and crypto now, maybe as opposed to last year when we had this conversation?
Yeah, I love this survey because we've been doing it for 7 years. One of the beautiful things about being Bitwise and having lived through 7 years of market is we've been able to do things like this survey. So for 7 straight years, we've gone into the market and had a partner ask hundreds of financial advisors what they're thinking about in the crypto market. And as mentioned, we did our most recent survey right after the election. And I can just throw out a few highlights. I mentioned that 56% were more likely to invest post-election than pre-election. But maybe the most telling number is that the number of advisors allocating to crypto in client accounts rose from 11% to 22%. Just think about that. We've been doing the survey for 7 years. It took 7 years to get from, or 6 years to get from 0 to 11. And then we doubled it last year. And I bet you we're going to double it again this year. The thing about I raised that, and I'll go into a few more statistics, but the thing about exponential growth, which is what I think we're seeing from the financial advisor space, is you don't notice it at first. So what is 4% to 5% or 5% to 7%, which is what we saw in the first few years of the survey? It's a rounding error. You can't feel it. But what is 11 to 22? And then what is 22 to 44? Remember, advisors control $30 trillion of assets. This is a big deal. It's a lot of money coming into this space. And so, we saw that happen. Just to throw out one more really fun fact is, we asked advisors who bought crypto in the previous year if they were going to hold, add, or eliminate their allocation. And 99% were either going to keep or increase their allocation. And I think that's another really important finding. You know, we talked about how there were $37 billion of flows into Bitcoin and how that was a record. I think it's going to be 50 this year. And part of the reason is I've rarely met an investor who made their first investment into Bitcoin and that was it. I'm never touching crypto again, right? Everyone dips their toe in and then they jump into the pool. And so I think that's another important finding from this survey that we're just, you know, we're at the dip their toe in perspective. I know the numbers are big, but I think the numbers are going to get even bigger because it's a big pool of capital that needs to allocate to the space.
Yeah, I totally agree, especially on the path into crypto. That was my personal path into crypto. You get into Bitcoin, then maybe you get into Ethereum and you realize there's a whole world of software here, not just currencies and they're misnamed. I'm just wondering maybe what are the biggest hesitations in some of these firms and family offices and RIAs on dipping their toes in, and then what finally gets them off the sidelines?
Yeah, you know, from this survey, one thing we ask each year is, what is your biggest hesitation? So I love that you asked that question. When I tell people I ask that, what they expect to say is something like it's too volatile, or I don't know how to value it, or maybe some of the FUD we've heard around crypto over the years. There's no real world use case or environmental impact. Those things we've debunked. Actually, the number one thing people have said every year for 7 years is regulatory uncertainty. I think that that was what was keeping people out, was a worry about getting audited or getting questions or facing legal repercussions. But now we're at the point where the US government has a strategic crypto reserve, right? And that is sort of, if that's not an all clear on that, I'm not sure what is. So I think that's going to come be a real game changer. The last thing, you know, what's still keeping people out, I know this is funny to say in crypto, but just time.
Hmm.
Traditional finance moves on a different schedule than crypto. As an example, some of the largest broker-dealers in the world, Morgan Stanley, Wells Fargo, UBS, Bank of America, still haven't fully approved Bitcoin ETFs. And crypto likes to stand on a hill and say that's ridiculous. But actually, that's normal for an ETF that launched a year ago. It just takes time. I believe now that we've cleared those regulatory hurdles, I think you're going to see people get into Bitcoin, and then, as you mentioned, Topher, into Ethereum and into all the other assets beyond it. I think we've really just started to open the floodgates, and they're coming through.
I certainly agree, and maybe it's my millennial perspective, but I do think traditional finance is speeding up as well. I know we've had
Mm-hmm.
conversations about more extended trading hours and 24-hour markets. So I think it's a trend that has to do with the speed of our technology in every sector and everything we do in our lives. But I heard you mention also some misunderstandings, particularly the media as well. So without calling out any specific publication, I'll say I've seen much of mainstream media miss the narrative sometimes and misconstrue or misunderstand things. You're more in the public eye and public quadrant. So I'm curious if you've seen the same and if there are any common myths or misunderstandings you'd like to help us clear up for the journalists today.
Yeah. Oh man, how long do we have?
Hmm.
We could clear things up for the journalist for quite some time. You know, look, I think we've made a lot of progress. I will say that, but there is still a lot of misunderstanding. Another word for misunderstanding as an investor is alpha. So I don't mind that there's misunderstanding because that means there's still substantial opportunity in this space. I know, you know, Nick and Matt and Matthew were talking about, is it late or is it early? When there's still the level of misunderstanding that we see in the market from the media, from investors, et cetera, it's still very early. So if I had to call out one where I think we're still at, you know, pre-game in figuring it out, it's the one you mentioned earlier, which is, why are there multiple interesting crypto assets? I actually think most of the media has gotten its head around Bitcoin as digital gold. Some people believe that will, you know, it'll match gold or exceed it. Some people are skeptical, but they understand why it's digital gold. They have that framework in their mind now, which I don't think they did a few years ago. But once you get beyond that, try explaining to, you know, a Reuters journalist what Ethereum is, or the difference between Ethereum, Solana, Monad, et cetera. Not a chance. they still have to come up that curve substantially on the difference on what exists, particularly beyond Bitcoin. And I plan to spend a lot of time in the next few years helping people understand that and really start to dig into that area. So that's a big one.
Yeah, and I'm glad to hear you're seeing the media start to catch up. I, of course, take it for granted, and I live in the crypto world 24/7, so I still judge them a bit, but they are catching up. And I know from the reports we've been doing, institutions are getting involved. So maybe, at the highest level, who should be adding blockchain to their portfolios in your experience? I mean, is this for everybody? Is this for large family offices, maybe niche investors? Kind of what role does this play for us?
Yeah, well, let me answer that two ways. One, I'm like the only Jack Bogle crypto investor I know. I'm a own the world, at least as your starting point, and then edit from there on what's most interesting. The reason I raise that is that crypto is now a $2 or $3 trillion asset class that is accessible to everyone in ETFs and other formats, and that is liquid. What that means is that if you're at 0%, you're actively short crypto versus the benchmark, right? Like the starting point should be have a market weighted position in crypto, just like you do stocks and real estate and bonds. And that would suggest about, if you look at all the available investable capital assets, that if you're not at 0.5% to 1% crypto, you're actively short this market. So one way of answering your question is yes, obviously not everyone has to have an investment in block, just like not everyone has to own bonds or has to own stocks or whatever. But if you're not investing, I think at this point, you're actively short versus the global benchmark. And I think people need to think about that and at least think about leveling up to that space. In terms of beyond that, who can really invest in the space? To me, the big differentiator between successful crypto investors and unsuccessful crypto investors is who has the behavioral fortitude to understand that this is a volatile asset and to not panic if it drops and not, triple down when it runs up. You have to manage it appropriately. And so if you're an investor who can handle that kind of volatility and risk, go back to that CFA piece I wrote. Every piece of academic literature that's looked at it has shown that adding crypto to a portfolio and rebalancing over a period of time boosts your risk-adjusted returns. It's like it has the best track record of any asset I've ever looked at. So I think a lot of investors should have exposure. And I think if you don't, if you're still at zero, recognizing that you're off benchmark for the world is an important thing to realize.
Now, we've got a few questions on the line here, so I want to make sure we get to some of them. So first, I'll just ask you, I think this is a good question to ask, and it's pretty general. What are the regulations around the crypto ETFs that investors should be aware of? And what's the landscape and the structure that the crypto ETFs operate in?
Yeah, ETFs operate in the same regulatory framework or crypto ETFs as all other ETFs. So Bitcoin ETFs or Ethereum ETFs are structured under the 1933 Act grantor trusts, but they have all the same protections. So they can only hold assets with a qualified custodian. They are audited by, in our case, KPMG. There are fund administrators and cash custodians like Bank of New York involved. And it has all the standard regulatory protections of 33 Act or 40 Act funds. That's one of the reasons people are so comfortable with them, because the same regulatory protections that have surrounded the gold ETF and really the same regulatory protections that surround things like SPY, the first ETF, one of the largest in the world, S&P 500 ETF, those same protections apply on the Bitcoin and Ethereum ETFs as well.
Super helpful. The second one is fairly related. It's what are the different considerations for an individual versus a family office or RIA in the crypto ETF conversation? Maybe I'll expand it and say kind of what does the process look like on their side when they think about, do we do this or not?
Yeah, absolutely. I mean, at one level, the beautiful thing about ETFs, the promise of an ETF is that every investor can invest like the largest institutions in the world. A fun fact is we know that the Abu Dhabi Sovereign Wealth Fund owns a Bitcoin ETF, and you can buy it in your Robinhood account. right? How many investments is that true of? So that's one of the beautiful answers. In terms of how the process should go, it's really a three-step decision. You need to decide if you plan to allocate, right? And that should be based on your own risk tolerance and how it fits in your portfolio. You should think about portfolio sizing, right? The size of your Bitcoin allocation or your crypto allocation has very different impacts on a portfolio. As you get, say, above 5% of your portfolio, you start to see volatility tick up. Below that, you tend to see, volatility not move very much. So sizing. And then you compare and contrast the ETFs. And what you want to do there is look for a large, liquid, low-cost ETF from a provider that you trust. And those are the three statistics. I could go into exquisite detail on how to compare, custodial setups or trading setups or total cost to ownership. But really, if you get one of the larger ETFs from a provider that you trust, these are great vehicles. Obviously, ours is the best, but the other vehicles are good vehicles as well.
And another question, just so people are aware, beyond the Bitcoin ETFs, what other additional products do you offer, and are you thinking about launching kind of beyond that?
Yeah, 100%. So Bitcoin and Ethereum ETFs, we have other ETFs that invest in corporate equities. So we have a crypto equity ETF that's miners and Coinbase and Galaxy, and that's an important part of the ecosystem. We have an ETF that owns companies that invest their treasury in Bitcoin, which is a fun ETF. Ticker on that is OwnB, that just launched. And then we have a variety of private funds or OTC vehicles, which trade like closed-end funds. They include the largest crypto index fund in the world, the Bitwise 10, which, a lot of my personal money is invested in that. I'm a big believer in index strategies as a foundation of a portfolio, and then you add satellite alpha around it. We have a DeFi index fund. I'm very excited about the DeFi market right now. And then we have a variety of smaller private funds. The goal of Bitwise is whatever sort of expression you want to make in the public crypto markets, whether it's tokens or equity, we want to create a simple product that lets you do that with a partner that you trust that handles all the complex logistics on the other side. And that's not all of the crypto market. I would go back to what I said about being a bogle crypto investor. The crypto market is three things. It's tokens, it's public equities, and then importantly, it's private equities, which Bitwise doesn't do. And, Blockchain Co-Investors is a leader in that space. That's the holistic portfolio if you wanted to own the space. So we fill those top two buckets.
That's very helpful. I know there's been discussion of tokens and ETFs beyond Ethereum. So Solana, there's also some discussion happening now around blended or multi-asset products. Can you just give us a sense, and I know you may have to answer at a high level if you're working on some things, are these things real? What may they look like? Are they coming anytime soon?
Yeah, so I can't speak about our specific filings, but I can put on my ETF hat and speak about the market in general. I think there's a high probability, but not a certainty, that we will see a large number of single asset ETPs launch in the near future. There are filings on assets like Solana and XRP, and I've seen filings on Avalanche and Aptos and others. I think those will come to market. I think they're likely to come to market in the second half of this year and maybe even sooner. And then I do think a killer app, we've filed to uplist our index product into an ETP, to turn it into an ETP. I really think that's a killer app for people, right? The beauty of an index product is you can make a bet on crypto, and no matter if it's Bitcoin or Ethereum or Solana or name your favorite asset, whatever ends up being the winner, the index will rotate into that over time. And I think we'll see that and other blended products. I'm hopeful we'll see it this year. Again, I don't know for sure, and not speaking about our specific filing, but the tides have been turned in a very positive way at the SEC. And I think they recognize that ETPs lower cost and increase security. And so they want to see more of them in the market.
Yeah, I think you said it spot on. Tailwinds are there. It's just a matter of how fast can we move, and that isn't always as fast as the crypto industry is used to. Maybe double tapping on that one. Following the flurry of positive news late last year with the election, and then following the inauguration, things like the Strengthening American Leadership in Digital Finance Order, which created a federal working group to propose a federal regulatory framework in 180 days. Probably ambitious, we may not quite get there, but with the potential, with the repeal of things like SAB 121 and hopefully clear regulation emerging, I mean, what are the biggest unlocks from here on out for institutional adoption? I mean, what really breaks the levee here on big capital?
Yeah, I think we're, I do think we're entering a golden age of crypto, and I think you're going to see a flowering of innovation and real world impact sooner than people think. I think we're going to get stablecoin legislation and market structure legislation before the August recess. That would be an enormous win. That's much faster than maybe the market is discounting. But when I talk to people in Washington, they're very optimistic that that will take place. What will that do? What will it mean? It'll mean a few things that are really important. Stablecoin legislation will mean that all of Wall Street will start building in the crypto industry because they all want to participate in the stablecoin boom. So JP Morgan, noted skeptic on Bitcoin historically, is going to become a big player in the crypto market. They're thinking about it today. Bank of America, Citigroup, they're all going to want to play. So as soon as we get that stablecoin legislation, you're going to see Wall Street turn from crypto skeptic to crypto backer. And I think that's going to increase the flow of investment activity into the space. And then market structure legislation, if we get it, will really change the game for assets beyond Bitcoin and Ethereum, because Bitcoin and Ethereum sort of made it through the regulatory fire, even under the Gensler regime. He couldn't keep those from escaping from the ring of regulatory uncertainty. But everything else has still existed in this ring of regulatory uncertainty. And that means big firms won't build on those assets. That means entrepreneurs are skeptical to innovate around those assets. That means the tokenomics of those assets have to be distant and spooky. And all of that can start to make sense. We'll start to see real world impact. So I think you're going to see traditional investors go from crypto skeptic to this being really a focus of innovation for all of Wall Street. I think that's going to happen this year. And I don't think the market has priced in that reality. I don't think it realizes how big that shift will be or how fast it can happen.
Yeah, I know Matthew mentioned it before, but we put out a biannual report on institutional adoption where I go and look at the top 50 asset managers in the world and grade them basically on what kind of blockchain services and capabilities they've offered. And we have a single page tracker, and we've seen that just fill up with green. So despite a lot of skeptical public stances in the background, we're seeing the big banks and managers use this technology, and they're eager to get in already. So maybe if we fast forward 5 or 10 years, what role do you think blockchain assets will play in a typical investment portfolio, or even things potentially like a public company treasury, like we're seeing, a MicroStrategy now, maybe in the future?
Yeah, well, I think a good way to answer that question is, will everything be a blockchain asset? So what role will blockchain assets? I think a lot of the world will be represented by blockchain-based assets. From stable coins, we're seeing progress on equity. We're seeing institutional DeFi come into the market with possibility of expanding access to private investments and other vehicles. So 5 or 10 years, it could be a majority of some investors' portfolios. Importantly, I'm not saying that every investor will own equity and will own bonds through tokenized exposure, but a lot of investors will. And then I know that wasn't quite the question you were asking. You're asking, what does it mean for the assets that support this industry? Well, if that vision is true, then all these assets are going to be much more important. It's going to be a much bigger part of the portfolio. There is no way the world moves on chain and layer 1 and layer 2 blockchains are not more valuable than they are today. And I think we're going to see that over the next 5 to 10 years, first with stable coins, and then with other real world assets. And I think it's a massive trend. I'm really excited to see it play out.
Awesome, awesome. I've got a question that came in about geographic expansion. So if I could ask you at the high level, kind of what's on the future timeline for Bitwise? How big do you think Bitwise can be? And are there any particular geographies you're excited about or sour on maybe?
Yeah. Oh man, I love that question. So, in the past year, Bitwise made 2 acquisitions, which I think points in the direction of where you will see us expand beyond our core remit. And we think the US core asset management business has, 10x room to grow at least. But we bought the largest European ETP provider in crypto, the largest Bitcoin ETP provider, ETC Group, and that was a way of expanding into Europe. Obviously, you're going to expand geographies. You could choose to build in a place, but if you have a team that aligns with your culture and your values, and you can bring them in, you can grow really fast. And we're seeing enormous returns on that investment. So, that would suggest we would look at other geographies as well. Obviously, I don't want to commit, but excited about what's going on in certain parts of Asia and Singapore. Actually pretty excited about what's going on in certain parts of Latin America. I think that's very attractive. So that's something we would look at. The other acquisition that we made was a firm called Attestant, which is a leading staking provider in the Ethereum ecosystem and expanding. And that's, you mentioned geography, but that's expanding into on-chain solutions. And we think that is another massive area for an asset manager to expand. So I think the world wants a crypto native asset manager that cares about this ecosystem. And in the same way that, you have Blackstone for private equity and BlackRock for public equities and PIMCO for bonds, the world wants specialists in specialist areas of the market. We think crypto is a big area of the market, and my goal is for Bitwise is to be the largest specialist crypto asset manager in the world.
And we certainly agree that it takes specialist expertise and attention to invest in this industry, especially now, given the limited resources and some of the lacking media coverage makes it murky to get into this space.
Yeah.
I know we're coming up on the end here, so I'll catch up and check if there are any other Q&A on the line. But in the meantime, is there anything else on the line that folks should know about Bitwise, maybe about other products which we haven't discussed?
Yeah, sure. Let's see, what else should you know about Bitwise? I mean, we do offer a variety of products, maybe a hint on things that we're thinking about that if it's interesting, you may want to reach out to us. I'm thinking a lot about income-based strategies. I know there are a lot of crypto investors who own a lot of crypto assets and want to earn income on them. That's an area where I'm spending a great deal of attention right now in ways we can help people generate income that they need. I think we're increasingly building out the alpha side of our business under my good friend and colleague, Jeff Park, and have enormous traction or gaining enormous traction in that space. So Bitwise is moving from just a passive-oriented vehicle to an active-oriented vehicle. But I'd encourage folks to come to bitwiseinvestments.com. We have a wide array of vehicles, covering the gamut of crypto opportunities.
Awesome, and I would echo that sentiment. Some of the research and publications you put out are just phenomenal. So maybe I'll ask one last question before I give it to Matthew. Just to make it practical, if I'm a wealth manager or family office on the line today, and I want to add Bitwise products to my platform for my clients, what does that process look like, and kind of what are the lead times I should think about?
Yeah, absolutely. We're set up to help you with that. So you can come to our page, email us at investors@bitwiseinvestments.com, or just email me, Matt@bitwiseinvestments.com. We'd love to help you. We can move exceptionally fast. I would add one more thing since you mentioned our research and writing. My pet thing, every week I write a memo, the CIO memo, which is my thought on the most important thing in the market. I try to make it plain English and approachable, 500 to 1,000 words, not waste your time. You can sign up for that at bitwiseinvestments.com/CIO memo. And it's completely free. And it's the only email we send you. So you're not signing up for a million emails. Don't worry. Just my once a week thoughts on the market. So I'd throw that out there as the shameless plug.
And I'd certainly echo that. I read it every week. But
Thank you.
on that note, I'll say thank you, Matt. As always, it's been an absolute pleasure to speak with you. And on that note, I think I'll ask you to drop off video and I'll hand it back to you, Matthew.
Thank you very
so
much
for having me.
as always. Thank you.